it's really hard. And it is imposing real pain on a lot of Canadians and Canadian families. Absolutely understand that. And our view is we want to get to the end of this road as quickly as possible.
The Canadian housing market has long been a subject of both fascination and concern, with its endless upward trend in property prices without stopping. This has caught the attention of both investors and policymakers. The Canadian housing market has been facing persistent challenges, including an imbalance between supply and demand, soaring prices, and an environment of low interest rates that has encouraged intense investor activity. These factors, coupled with a surge in speculative investment, have contributed to an atmosphere that many now fear is due for a correction. In this video, we will delve into the disaster brewing in the Canadian housing market. In Canada, housing prices are increasing to record-breaking heights, resembling a pattern similar to what happened before the global financial crisis in 2008. Experts suggest that Canada is facing one of the biggest housing bubbles in history, and if it pops, the country might face a more severe recession than predicted. When the pace of Canada's real estate market unexpectedly slows down, it raises concerns about the possibility of a housing crash. A real estate crash doesn't have a strict definition, but looking at past instances in Canada and the U.S., it involved a significant drop in home prices, often by double digits, with prices remaining low for years as cautious buyers steer clear of what they perceive as a risky market. The most notable housing crashes in North America were the downturn between 2007 and 2013 that affected the U.S., and the housing crash that caused a decline in Canadian housing values in the early 1990s. In the case of the U.S., during the global financial crisis, the median home price dropped by 29% between July 2006 and January 2009. During this time, the housing market's overall growth is believed to have decreased by more than $4.5 trillion. During Canada's last housing crash, which lasted from 1989 to 1995, while it wasn't as severe, certain markets were significantly impacted. For instance, in Toronto, by August 1993, the typical home price had fallen by 28% from its peak in April 1989, hitting a low point at $189,000. For many Canadians, struggling with mortgage or rent payments is an ongoing challenge. As of August, the average home price in Canada stood at around $750,000 Canadian. This marks a 360% increase from the year 2000, when the average price was at $163,000 Canadian. The problem is particularly serious in big cities like Toronto, where you need to earn over $100,000 annually to buy a house. In Toronto and Vancouver, houses are now sold for over $1 million Canadian.
Here in Canada, the country's housing agency is calling attention to a potential storm of another kind. CTV's Heather Wright explains.
These cities are often considered among the top 10 most unaffordable places to live globally, based on the Demographia International Housing Affordability Index. Placed along cities like Hong Kong and San Francisco, rent is also getting pricier in Canada's major urban areas. The average rent for a one-bedroom apartment in Toronto has reached $2,500 Canadian a month, marking a 25% increase from the previous year. Recently, people residing in smaller Canadian cities have started to experience the pressure of rising housing costs. This issue has been a long-standing national concern, with politicians at all levels of government making repeated promises to resolve it over the past decade. One of the root causes is the scarcity of housing, as the population growth, largely driven by immigration, surpasses the rate of home construction. According to the country's National Housing Agency, Canada needs to construct 5.8 million new homes by 2030, including 2 million rental units, to tackle the problem. This means an estimated 828,000 new homes are required each year, significantly more than the 260,000 homes built in 2022. While there isn't a precise technical explanation of a housing crash, we do know that they usually result in two key effects: significant drops in home prices and lengthy periods of recovery that can last for several years. To understand the potential scenario of a housing crash in Canada, we must examine the reasons behind it. Let's explore the factors that contributed to the most recent crashes in both Canada and the U.S. In the early 1990s, Canada faced a severe economic downturn, leading to an unemployment rate of 11.3%. Similarly, the U.S. experienced a housing market crash from 2007 to 2009, causing the unemployment rate to jump from 5% to 10%. The Canadian crash of the 1990s was caused by rising prices, economic downturn, and job losses, which had a spread effect on the housing market. In the U.S., the use of questionable subprime mortgages burdened homeowners with loans they were unlikely to be able to repay. Crashes, like sudden accidents, can shock the housing market. The effects of such events can linger for a long time, making it tough for things to go back to normal quickly. In The Big Short, the story of the U.S. housing crash, it seems like only a small group of people were aware that the crash was going to happen in 2007. It's as if they had a secret crystal ball or something. If the housing market in Canada were to crash, it would need people to start feeling differently about buying homes. Instead of being excited about owning a house, they might get scared of the money risks involved. This change in thinking could make home prices stay low for a long time. It's like people would be hesitant to jump into buying a new home because they'd worry about the financial dangers more than the joy of having a place of their own. The difference between a housing crash and a housing correction is how serious they are. In the U.S., the housing crash from before lasted for a long 6 years. A market correction, though, usually takes around 6 to 18 months. When there's a crash, prices can drop by a lot, even by more than 10%, but during a correction, the decrease is usually just a few percent, which is less than 10%. The causes of housing corrections are also different from crashes. Corrections happen when things change in the housing market, like when mortgage interest rates suddenly shoot up or when new rules make it harder to buy houses, like the mortgage stress test. Unlike housing crashes, corrections don't need a lot of people to lose their jobs. In Canada, for example, the number of people without jobs was really low when the housing market started to slow down in the middle of 2022. Is Canada's housing market crashing in 2023? As of a few months into 2023, we can see that Canada's housing market hasn't crashed yet. Home prices haven't dropped quickly enough to be in the crash zone. In February 2023, the national average home price was just over $662,000, which was 18.9% lower compared to the previous year. Even though this number might seem scary, it was still $50,000 higher than the price from the month before, indicating that the market is bouncing back. Back in February 2022, Canada hit a record with its average housing prices. During that time, mortgage rates were at incredibly low levels. It's not surprising that there's now a significant drop in sales and home values, especially since rates are much higher and buyers have less money to spend. The decrease in prices is a signal that the market is adjusting, not that it's completely broken. In Vancouver, the benchmark price for homes sold was just 9.3% lower than it was a year earlier. Meanwhile, the average sale price in British Columbia dropped by 14.7% during the same period. In Calgary, the overall average price went up by 1.5% compared to February 2022, while in Alberta, the average price went down by 10.6%. Looking at Winnipeg, the average prices of detached, condo, and attached properties fell by 13%, 5%, and 0.1% respectively, compared to the previous year. In Halifax, the average sale price dipped by 8.7% in comparison to February 2022. And in all of Nova Scotia, the average price decreased by 4.3% during the same time frame. While Ontario's average price fell by over 20% in February 2023, the average home price for detached homes in Toronto decreased by 17.5%, but remained higher than it had been since June of 2022. Even though the provincial average price has dropped significantly since the market peak, it's still higher than it was 8 months ago. High inflation and interest rates, which are currently affecting the Canadian housing market, both played a role in Canada's previous crash. However, there are reasons to believe that a housing crash might not be on the horizon for the country. Canada's economy has a variety of industries and is generally robust, and the government provides support through stimulus measures, especially during tough times like the COVID-19 pandemic. These factors help in avoiding widespread job losses among Canadian homeowners during economic challenges. When people can manage their mortgage payments, they don't usually have to sell their homes for significantly less than what they paid, which is common in a housing crash. Another factor contributing to the stability of the Canadian housing market is that mortgage lenders in Canada are cautious when assessing borrowers. Their increasingly stringent standards for lending help prevent situations where people are unable to pay back their loans, which can lead to defaults and foreclosures that contribute to a housing crash. Also, there's the mortgage stress test, which offers borrowers some financial leeway in case mortgage rates go up during their mortgage period. Mandatory mortgage default insurance is required for buyers who put down less than 20%, ensuring that lenders receive payment and can continue to provide financing to new buyers. Additionally, the Canadian housing market's strong population growth continues to drive housing demand. Between 2016 and 2021, Canada's population increased by 1.8 million individuals, surpassing the growth rates of other G7 countries. The government's ambitious immigration goals aim to bring in an additional 1.3 million newcomers by 2024. With such rapid population expansion, the demand for housing is unlikely to decline in the foreseeable future, both among those purchasing homes for living and investors. This high demand generally prevents a significant and prolonged downturn in sales and housing prices. Concerns loom over the stability of the Canadian housing market. Investors are worried about a potential financial disaster, while factors such as housing price fluctuations, economic uncertainty, and the lingering effects of the COVID-19 pandemic continue to cast shadows. There are also positive signs. Even though there's worry, it's not for sure that things will go bad.